Welcome to the Payroll Podcast with your host, Nick Day. Find out what it takes to truly discover what it takes to elevate your career within payroll as we meet with the industry leaders who are shaping the industry for tomorrow.
Hello, everyone. Welcome back to Payroll Question Time. Today's discussion points, we're going to talk about salary sacrifice, what it is and what it isn't, the future of pensions, the end of furlough, written statements of employment particulars, what, who, why and when, planning ahead, right to work, new guidance, and of course, recruiting and retaining payroll talent, as well as a couple of hot topics if we get time at the end as well. We're going to delve into our first subject today, which is salary sacrifice, what it is and what it isn't. I'm going to come to you, Samantha.
What salary sacrifice is where an employee agrees contractually with their employer to give up or sacrifice, and I think there is a clue there in the name, a higher cash salary in return for a non-cash benefit. So essentially they're giving up salary, they're giving up pay, they're giving up a contractual right to it. And I can't emphasize that enough, because this is, and anyone who works in payroll will know, the debates and discussions you have with someone who's going off on maternity leave, when you tell them what the maternity pay value is going to be, they'll say, well, you've calculated using the wrong figure there. What about the salary sacrifice amount? No, contractually given up, no right to. It's not a deduction, it's not a purchase, it is a reduction to pay in return for a non-cash benefit. And over recent years, we've seen quite a lot of consultation from government who were trying to address the reach that salary sacrifice was increasingly having, as employers and industry were finding ways of using salary sacrifice more to offer savings, particularly on employer and employee national insurance contributions. And the end result of that consultation meant there was a very small number of items that can now be sacrificed, or for reasons that can be sacrificed. For example, employer pension or pension advice. For example, cycles or cycle safety equipment. For example, employer childcare. And at the very beginning, we had grandfathering arrangements that included low value company cars, but they have now been exhausted and fully fulfilled. And that's salary sacrifice in a nutshell, I think. There's a lot of impacts as a result of salary sacrifice there.
It's a super summary. But let me come to you then, Simon. Does furlough impact it? We're going to talk about the end of furlough in a while, but does furlough impact salary sacrifice?
It doesn't impact the benefit right, but it does impact in relation to how an employer funds that benefit. Because as Sam's indicated, it is actually a non-cash benefit provision. So the employer is actually giving it away for free on the basis that the employee has taken a pay cut contractually. But furlough, the difficulty with furlough is it is post-sacrifice. So you can't sacrifice furlough pay because it's already judged on pay that's been sacrificed. So if you take the money off the individual again, you're actually in breach of the coronavirus job retention scheme, and the government could come and ask for all the money back. So you have to pay 100% the grant money received from the government. Now, top-ups you could potentially reduce, and there are implications for pensions. Which I think we've covered before, but we'll repeat again here, that of course, if you've got a smart pension or a salary sacrifice pension, you can't actually reduce the furlough, but the employer still has to continue to pay the contribution amounts that were agreed in the contractual arrangement. There are other aspects that go along with that, because we see that, throwing in another topic, some people think that holiday rights stop when you're furloughed. They don't, because you're still employed. So you're still entitled to the benefits associated with employment as if you're working, even though you're not.
Fabulous. We've got opt for rules as a bullet point listed here. So who would like to talk me through a little bit more about how that impacts on salary sacrifice?
I think lots of people operate schemes of benefits. And if you said to them, do you operate a salary sacrifice? They'd say, no, we don't have one of those, whereas in reality, they do. So anything that's pre-tax and pre-NI is actually a salary sacrifice, but the government have another term for it. So the law that was passed back in, I'm guessing from memory here, and 2016-17 that came in is called optional remuneration arrangements. So where you swap anything within your earnings base to be a benefit instead and get tax or national insurance relief comes under the OPRA rules. And what the OPRA rules mean is that except for benefits which are exempt, which is childcare, pensions, cycle, the amount that's taxable is the amount you gave up. All right. So there was an element of, in the old days, salary sacrifice. If you gave up an amount, it might be taxable, but it might have been taxable on 20% of the asset price and not the amount that you gave up. Under the OPRA rules, the amount you gave up is the amount that's taxable, or the benefit is higher. So it's just understanding it. Sometimes we often see people talk about, well, they can't buy their childcare and this and that and the other. And there's an element of they're not buying anything because you don't get tax and NI relief on things you buy. The only things that you can buy that have tax and NI relief are potentially, well, actually share plans, approved share plans, share incentive plans, which are pre-tax and NI deductions. And the only real deduction that is pre-tax is pension employee contributions and give as you earn. So charitable giving. Nothing else is. So if you're buying a bike, you're not buying a bike, you're being lent one, you're actually taking a pay cut. So it's an OPRA.
And whoever said payroll was simple? But away from payroll for a moment, we're going to look at the future of pensions. And of course, we've got our resident pensions expert, Andy Nichols, with us, who's going to help us understand the future of pensions in a little bit more detail. So, Andy, as I pass the conversation over to you, can you tell our audience a bit about the next phase of auto-enrolment and any anticipated changes to the pensions dashboard?
Indeed, yeah, there's lots going on, actually, which do have an impact. So there's probably a few other things I'd touch on. But in terms of automatic enrolment, there was a review carried out in 2017, and they suggested the following. So there's a consultation, etc., and the feedback from all of that was two main changes will be happening. It's just a case of when. And the most likely when is around about 2024, 2025, so the mid of this decade. But legislation will have to be passed, so there won't be all of a sudden happening. It'll be quite clear what's happening, and the timeframes, etc., will be obvious. But the changes are reducing the automatic enrolment trigger age from 22 down to 18. So 18-year-olds will be automatic enrolled if they earn enough as well. And the other change is to reduce the lower limit down to 0, which is probably going to be a removal of the limit. So that those individuals who would have been an entitled worker, as it is called in automatic enrolment, i.e. those who could join the scheme but the employer didn't have to pay into the scheme, that category will go. And everyone who joins the scheme, either because they've been automatic enrolled or they've opted in, will have a right to an employer contribution from £1 upwards. Like, even if we're still going on back in 2024 onwards, then we'll be able to tell you that. So yes, definite changes coming up, but we don't know exactly when. Controlled by DWP. The next thing, of course, is a pensions dashboard, which you're probably thinking, why does that impact payroll? Because simply payroll, the employer and the payroll system, along with HR systems, are going to be the source information for pension system data. And that data will be used by a pensions dashboard to show individuals all the various pensions they've got available to them, all the ones that they've probably forgotten all about. And they can just log into a pensions dashboard. Probably the target is 2023 for that to be available. Wait and see exactly the time frame for that. And then you could, as an individual, log in, look at all your pensions, and then you could think, actually, is that going to be enough to retire on? Do I need to save more, etc.? There's lots of development going on, mainly impacting the pensions industry. So like a data standard, so all pension schemes know what sort of data has to be provided to the pensions dashboard. How do you make sure that people are getting the right data? So you're protecting individuals, GDPR and all those sort of things. There's a current working party being set up by the Pensions Administration Standards Association, the PLSA, ABI, Assurance of British Insurers, Association of British Insurers, all various parties involved in the industry to try and link together how the data is requested. So, to make sure there's a standard across all of the world of pensions. And if that had been done for automatic enrolment could have been easier. So I'm really pleased that Pensions Dashboard are going to do things really effectively. You just got to wait and see. There's going to be test companies, seven companies have agreed that they'll start providing data early 2022 to test the dashboard out. So all of 2022 will be getting things in place ready for 2023. So watch this space, because you may get, as an employer, when they start to do these tests to see going live in effect, that's when the data gaps will be identified. And that's when, as employers, you may end up with, can you tell us what happened back in 2000 and maybe even earlier than that? So be aware there may be requests for information. That's probably the dashboard side of things. And then you may have noticed that in the press, this is a personal thing, really. This will impact you. The normal minimum pension age at the moment is 55, but that's going to be, it's been proposed to increase that to 57 from April 2028, which means that the earliest you can access your pension to take money out of your pension will be going from 55 to 57, unless there's other circumstances. Ill health normally will allow you to have that earlier. But there's a lot of thought, well, actually, I want to keep it at 55. So there's a lot of debate going back and forth about how that's going to work actually in practice. And maybe the scheme rules, if you're in a scheme that says 55, you can get it at 55. If your scheme says 57 later on, you're going to have to wait until 57. So lots of interesting things, but it's really a personal thing. It shouldn't really impact payroll unless you're going to end up with your employer changing the scheme so the scheme is a 55, not a 57 age scheme. The other thing that I think, which I'd like to mention, is Nesta looking at an opting out trial for savings, which is not pension, but Nesta are a large pension provider, but the government are very keen for financial well-being for amongst people. So Nesta being asked to trial this opting out process, which is you'll be automatically enrolled into a savings scheme and you will need to opt out. So that's going to be trialed by Nest soon. So you might be one of the employers that are part of that trial, maybe. How that will work in practice and a long-term future, that I don't know, but the government are really serious about looking after people's financial welfare. So that's a thing to consider, how it might impact payroll. And of course, tax relief on pensions is a big topic. And the government, HMT, all the money spent on furlough, will they recover some of that through changing the tax relief methods through payroll? Well, there's no point in debating that here. We just wait and see what the government decides. That's my thought.
Lots going on. Watch this space. Interestingly, we had a bit of a lively discussion about the financial wellness piece in our pay on demand section, which we did a PQT a couple of episodes ago. So you can have a look back at that. But one thing, whether you're a fan or not a fan of pay on demand, that we can be sure, based on the information that's been released, is that financial wellness has a huge impact on mental health. So it'd be interesting to see how that trial comes, whether it actually has a positive impact, which would be interesting to see going forward. Well, we've got a huge subject to open up. We're going to use that buzzword of furlough again. Now, I'm sure I'm not alone as well in celebrating the end of furlough. I know it's going to impact many employees, but at least from a payroll processing and administration perspective, we know it's been quite challenging. So as we do come near the end of the scheme, it's undoubtedly going to leave us all with a lot of questions, which is why we've got an expert panel here on hand to help you with all of those today. Simon, over to you. Tell us what's happening and what do we need to be aware of and plan for over the coming months.
Yeah, sure. Thanks, Nick. So we've got another significant date soon upon us. So the 1st of July saw the requirement for the employer to fund an eighth of the furlough payments paid to individuals. So that was the first, a little bit, we had this a year ago, but that was the first point where the government weren't covering the full 80%, the employer having to cover the national insurance contributions, theirs and pensions, but they could get all of the pay back. July, that dropped to a 10% contribution from the employer, 10 percentage points, so that's an eighth that the employer had to pay. Of course, on Sunday, that goes to 20%, so a quarter. So employers will now be having to fund a quarter of the furlough payment, plus pay all of the employer's secondary national insurance contribution and pension contributions. So there is that change. I know it's been problematical operating calendar months for people, but the claims are still beginning of month to end of month, and that doesn't conveniently fall with weeks, 2 weekly, 4 weekly cycles. So you have to split claims and work them out. And what do you do because data's late and it hasn't been notified in time? We still have the 14th, 15th or 16th basing whether there's a weekend claim point. Bit of a change. It's starting to get more expensive, and come September, it ends altogether. So end of September, no more furlough. Everyone's back to normal. I guess the government would point to the fact that having been at the high of 14 million, is it, that we're on furlough, we're now down at 2 million left. So the nation should be returning. And of course, you've got the world organisations indicating that Britain's going to boom. The reality on the floor may be different, and some may still be struggling. And equally, at some point, some of these debts and loans that we've had to get through this period of time will need to be repaid. So is that a reality, and what will happen, or are we heading for redundancies?
I think that's some phenomenal advice there. And obviously, PQT here, we're here to try and help everyone listening to this, try and protect you all as best we can. So let's talk a little bit about the audit trail and compliance work that we need to be wary of. Samantha, maybe I can come to you to talk to you about, what people, how long do we need to keep these records for? Is there what's the best process for our audit trail and compliance process?
Absolutely. I mean, let's just spend a couple of minutes thinking about what actually can put an employer into hot water. What do we talk about when we're looking at furlough fraud? We can use the F word, or errors, because it isn't always intentional. It might be that you have not told an employee that they're on furlough. The first they know about it is when they receive a payslip. You're not paying an employee all of the furlough pay that you're claiming for their hours that aren't worked. You are keeping fraudulent records, is an obvious one. And how does HMRC know about this? Well, they have a fraud hotline, and they have this for all taxes, not just for CJRS. And of course, they have RTI records. So there's an element of checking that goes on when a submission is made that looks at a particular key period and can reject a claim where it has reason to, or HMRC systems have reason to think that that's an invalid claim. So in terms of compliance work, so what happens where an employer has completely failed to be compliant with their CJRS claims? Well, the repayment mechanism is just along the same lines as it would be for income tax. And of course, the penalties and interest charges sit in the same space as well. So whatever would have happened for income tax, which is you repay 100% of what would be due, would be the same again. I'm frantically trying to remember how long we keep the records for. I remember there's the 5 years and the 6 years rules in terms of written agreement between the employer and the employee. And then I think it's a minimum of 5 years, is it, Simon? I'm looking at Simon Liu here for CJRS records. Obviously, I would say keep it as long as you possibly can within your data protection policies, of course.
Super. And bringing it back to what has happened to the bonus.
Had some
if you told us he'd have to kill us.
Information.
I'm dead.
Do you think anyone's due a bonus this year? Only payroll professionals, is that right?
Absolutely.
No one else is due a bonus. I think I'd be very surprised if anybody saw the job retention bonus being resurrected at all. I think I'd suggest it ended when furlough was extended.
I think, and I would agree, from my perspective, I suppose, and as a managed payroll service, I suppose the disappointment is so many businesses towards the end of last year had focused on the bonus, and they were looking for it in February and in March, and then at short notice that was removed. So there are businesses out there, I don't know, who maybe they're still included in their financial accounts as a possibility of receiving, because last September in particular, there were businesses making decisions of, do we continue or do we cease trading? And some of them had kept going because the incentive was real for them, so there hasn't been anything that as Simon said, that I'm aware of, but I think it's something that maybe you aspire to, you hope that it's still there, I suppose.
Yeah, for sure. Well, maybe we'll watch this space and see if it returns. I like all guidance. It'll probably come out last minute or 2 weeks late. So, I wouldn't rule it out yet. Who, why, and when? And we have our expert from DWF, John Keeble, who's going to tell us all about the changes that may impact our audience from April 2020. John.
Yeah, thanks, Nick. Well, of course, it's not new that you've got to give an employee a written statement of particulars of employment. That's been around for a long time. And written statements of particulars employment is quite a mouthful. We employment lawyers call it a Section 1 statement. This is Section 1 of the Employment Rights Act that contains those obligations. So I'll use that just to save my mouth from working too hard. Mm-hmm. So there's always been that obligation, but there have been some changes that have been brought in since the 6th of April. One of the more significant ones is that the obligation is now extended from employees and also covers workers as well. And for those who may not have kept up with the Uber case in the Supreme Court and other types of litigation, in employment there are really 3 categories that you can be. You can be self-employed, you can be employed, or you can fall somewhere in the middle and be a worker. And if you're a worker, you get some employment rights, but not all of them. And I have to say, sometimes it's rather difficult to define where the line comes between whether someone's self-employed or a worker. So there's an obligation to provide this Section 1 statement to a worker. But the starting point is trying to work out whether someone is a worker or not a worker, which I have to say isn't the easiest task. So if you're using casual workers on an ad hoc basis, yes, they would clearly fall within that. There's some scope for directly engaged contractors to fall within that as well. As I say, it's not the easiest line to sometimes draw. If you're using agency workers, the obligation isn't on you to provide them with the Section 1 statement. That would be the obligation of the employment agency who's supplying them to you. But there have been some changes that have come in on 6 April that are in addition to it being extended to workers. It doesn't apply, the new rules, necessarily to those who started work before the 6th of April 2020. And for employees who started work before the 6th of April 2020, they're entitled to a Section 1 statement if they ask for it, but they don't get one as of right. So there isn't a need to run around and reissue your written statement of particulars of employment. However, if there is a change to the terms of employment, then you've got to provide an updated statement, and that will apply to those who started after the 6th of April and those who started before the 6th of April. So you've got to update in those circumstances. Now, you may be quite familiar with what needs to go in a Section 1 statement. There's a very long list of things that I'm not going to go through. The names of the employer and employee, details relating to pay, holiday, and all that type of stuff. But there have been some additions that were introduced on the 6th of April that you may not have picked up. And the first one is the days of the week when the worker is or employee is required to work. And if the working hours are variable, how any variation would be determined. So that's a new addition. The second is that you've obviously got to set out the holiday entitlement and always have done. But in the new iteration after the 6th of April, you've also got to cover off any other paid leave to which someone may be entitled. And of course, that may be adoption, maternity, all of those other things. So you need to cover that off. A new addition, number 3, is you've got to deal with any other benefits that are going to be provided. They've got to be included. fourth new addition relates to probationary period. So you've got to cover that off in the Section 1 statement. And also, if there's no probationary period, you've got to set that out as well. And you've also got to cover off any training entitlement which was provided by you, including any mandatory training and any training which the employee has to pay for. And also, as well, this is a point of note, although this has always applied, these things apply to non-contractual benefits as well as contractual benefits. So, for example, if you've got a non-contractual bonus, that should be referenced within your Section 1 statement. Now, most of these things have to be included in one document. There are some exceptions that you can provide some details within the following 2 months, and that really relates to collective agreements, training entitlement, and pensions. As I say, there are some changes. Provisions still apply. That if you change the terms, you've got to give a revised statement. Being a lawyer, I couldn't end on what happens when it all goes wrong. I would say from a practical point of view, the liabilities for not quite getting the Section 1 statement right or not providing it in itself are fairly limited. But if they generally piggyback on other claims, which give a right to compensation of up to 2 weeks or 4 weeks pay. So we don't really see very much, to be quite frank, in the way of freestanding applications to get the Section 1 statement amended or corrected. It's always part of a kitchen sink approach when someone's bringing a whole host of claims. And when they're looking at the book of the claims they could bring, they see that at the bottom and tack it on at the end. But it is important to get that right. There's a note on there about flexible working, and there has been a private members bill that came out in July. It's a 10-minute bill. And currently for flexible working, the onus is on the individual to make an application for flexible working. And I have to say, from a sort of tribunal type perspective, all the tribunal can really look at is whether the process has been followed. What it really doesn't engage with is the merits of the decision whether or not to allow flexible working. And the private members bill wants to flip that round to a degree so that it sets out within the contract options for flexible working, potentially gives a right to flexible working. But I don't think it stretches as far as giving a right to work from home. Although, frankly, given where we are, the genie's out the bottle on that anyway. And quite a lot of what we're dealing with in a practical and legal sense is quite how you deal with those situations where people don't want to come back into work and how you're going to manage it operationally. So that can be something of a challenge which we're all facing at the moment.
Sure. Now we're going to jump into the next section here, which is payrolling benefits. We talked a lot about this in the last PQT. And for those that joined us last month, you'll know there were a lot of questions that we visited as well. We felt it was worth another visit. So I'm going to go to Samantha, Simon and Lou, who are going to help us all understand how we can plan ahead effectively. Of course, for those that didn't join us last time, you can go back to the Payroll Podcast, or you can indeed go to SD Worx and find the recordings or listen to the recordings if you want to find out what those questions were and how we handled them. But let's start with you, Simon. What can payroll managers start to do now to prepare for payroll benefits next year?
It is important. Quite often we'll get a number of customers or employers come to us around April and say, we're just coming up to the April payroll deadlines, we'd like to payroll. And there's an element of, well, it's April the 12th. And they'll say, yes, our cut-offs, we pay on the end of the month. Our cut-off's the 18th or the 20th. Can we payroll this month? And there's an element of, you had to register. And you had to register before the 5th of April. So there's an element of, you have to plan ahead. You can't just then suddenly decide. And also there are implications, because the other aspect of payrolling is, although it looks very similar to P11D, although some of the calculations are fairly similar to P11D, they're not actually the same. So the need for data, the need for application is different, close, but different. So a number of times we've had people come to us in mid-April and say, we'd like to do that payroll thing now. Can we go ahead? And the answer is, you're too late, you've missed registration. And then we find they come to us the following April and say, we couldn't do it last year, we'd like to do it this year. And there's an element of, well, the 6th of April has passed again, you're too late, you have to register. And there's an element of, you could register tomorrow for 6th of April 2022, why not do it? Because if you don't go ahead, you don't have to, but you do need to register ahead. Hopefully that helps a bit, but there's an element of plan, and it is not the same thing as P11D. Close, but not the same.
I think we can coin the 5 Ps there, Simon. Mr. Parson says that preparation prevents poor performance, right? The 5 Ps.
Oh, well, there you go.
There you go. Samantha, let me move it over to yourself. Let me talk a little bit more about the conversation we had last month, if you can take it a little bit more forward in terms of other things that we need to consider.
Absolutely. I mean, just to sort of finish off really on the planning ahead, I think the planning ahead needed will very much depend on who you are and what your role is within the payroll industry. So Simon is talking there not only from a software developer perspective, but also a bureau. So providing a payroll service to clients. So if you are providing a service to clients, so it's the reason they're using our services, and of course I'm Armstrong Watson that also has a thriving payroll service, is because the employer doesn't really want to get their head around payroll, and they don't want to get their head around the intricacies. They may also be using colleagues of yours within a different team. So the tax team may currently be doing the P11Ds. So there might be an issue there about whether or not there's a conflict if you want to promote payrolling to your clients because you think it's the bee's knees and it's the best thing since sliced bread and whatever. We know from personal experience that employers quite often don't like to pay a lot of money for the payroll services that they get. They don't value it in the same way as they possibly would do in the tax space. So there's a lot of different issues. So now is the time not only for employers to be thinking about registering next year and the implications of what that's going to do for them, but also for the providers of payroll services to be thinking, actually, what conversations do we need to be having with colleagues to actually promote this within our business, or actually quell it? We don't want it. So, and what are we going to charge for it? Let's talk costs. It's an important thing. If we don't value what we do within payroll, then our clients most assuredly and our colleagues most assuredly aren't going to. But one of the discussions we were having last month, sorry, I kind of went right around the table there to get to what we were discussing last time, was actually the discussion between the registration for HMRC's payrolling of benefits in kind, PBICs, that's a nice little acronym there, and informally payrolling. Now, informally payrolling requires you still to submit a P11D at the end of the year, even though you've processed the amounts through the payroll and collected tax in real time. But you would identify on the P11D that you have payrolled that benefit in kind. Now, what we were told very last minute back in the employer bulletin February, thank you, Simon, was the fact that actually informal payrolling, well, if you're doing it, stop it. And there was no further kind of notice on that or discussion. Now, I have to say, I signed up for an HMRC webinar rather recently on the subject of expenses and benefits in kind and payrolling, simply because I wanted to sort of see if they kind of expanded on that. There seems to be a suggestion that informal payrolling could still be possible. And one of the reasons you might informally payroll still is because you payroll the value of your loans, the beneficial loans that you provide to your employees. And beneficial loans, together with living accommodation, aren't currently included within the PBIC registration service. So there might be some very valid reasons why an employer can't suddenly sign up to PBICs, because they provide beneficial loans and there is no facility or functionality to be able to process those in real time using the formal service. So, these are sort of, again, further considerations that need to be had. What are you intending to payroll, or what do you currently payroll? And is there a functionality for you to be able to register with HMRC to continue doing it.
Super, fantastic. If I come over to yourself, Lou, again, someone else who's very much involved in delivering payroll services for a number of clients, you'll see some of the questions and things that come through. How does it impact PSA Class 1B calculations, and what else are you finding in terms of your clients, I guess, challenges or questions?
I think to talk about P11Ds first, I think a lot of clients struggle with P11Ds and also the informal payrolling benefits. That really did throw a lot of us into disarray initially on that February bulletin, because it was from a managed payroll bureau, you're having to communicate that to clients. And at EY Absolute, we have global clients across the world. So it's trying to put it in a way that's understandable, and also to make it known that the 5th of April deadline, there is no moving of the deadline. If you're not, ahead of the game, that then you'll have to wait for the following year. And I think it's also what Sam there has also mentioned is whenever you're registering, you have to determine what your benefits are. And at that stage, so you have to be aware. And sometimes businesses don't fully understand the benefits that they have and what has to be registered on a P11D or what can be informally payrolled, and that's about getting tax advice, and that's very much where my business would come to. Now, PSAs, and also something that sometimes is forgotten about, is the ERS. Whenever a business would have the stocks and shares going through the payroll, you also have to make sure that you have your filings completed for that, or else HMRC will pick up that maybe that you have failed. They've noticed that in the payroll there is stocks and shares going through, but you haven't filed your ERS, and therefore they do come and they do ask questions, and there can be penalties for that as well. So it's about looking at your whole payroll, looking at what HMRC in particular are most interested in, and very much if you think we're just through a pandemic, we're still in it obviously, HMRC are wanting to see where they can raise funds because of the amount of money the government has been spending, and that comes back and links into the fraud and making sure that you have your records. I know I keep saying this, I can't state it enough. You need to have your records. You need to have an understanding of what you're doing and processing through the payroll, because you will be questioned. And something that's very much on social media, whenever you're looking at the Facebook groups and people's grasp of payroll, sometimes you do be concerned over what's being processed, what's being understood. Even if you look at what John's talked about in relation to contracts, the importance of a contract, the importance of an employee understanding what they're signing up for. And I think that's something that we all have to be very mindful of.
Simon, wonder if there's anything else you'd like to add to the payrolling benefits conversation, or shall I jump straight into some of the audience inquiries?
No, that's good. I'd go for it. We promote payrolling. It's great when it works. Some things it doesn't work very well for. So just be wary of that, because remember, to payroll successfully, you need accurate data up front. It's not something you can do in arrears, because you have to do it within the tax year applicable.
Super. So let me jump into the first question then, which actually relates to payrolling benefits. It comes in from Anna Opasinka. So she said, could you let me know what happens when benefits are payrolled, but the employee enters the unpaid maternity leave period? Can you exclude the employee from payrolling mid-tax year? Samantha, maybe I can come to you with that.
Yes, my understanding is yes, you can do that. I mean, when you first register with payrolling of benefits in kind, you are firstly presented with an opportunity to identify which benefits in kind you want to payroll, which values you want to payroll. The most commonly payrolled are medical, health insurance, and company cars and fuel, and they are consistently the most common. But equally, you can identify employees that you want to exclude, and so you can notify HMRC of that. I think where somebody stops mid-year, what will happen then is HMRC will pick up any deficiency in tax in the traditional manner. Simon or Lou might want to add more to what I've just said there.
So those that go on maternity, you can exclude. I think the online actually lets you stipulate which individuals, and you report the residual benefit that hasn't been payrolled on a P11D. Yeah.
Super. So I'm going to get another question here. It goes back to our salary sacrifice topic a little bit earlier on. It says there are a lot of, it comes from Emma Braunton, it says there are a lot of places pushing salary sacrifice for electric cars payments. Are HMRC talking about adding this to their exemption list?
Initially, they benefited from the grandfathering, but I'm not aware, because there is a potential taxable element. I'm not aware that they're excluded now.
Yeah, sure. I think they are. And that was can you remember at the beginning, I couldn't remember the fourth item on the list of excluded items. And it's vehicles under 75 grams of CO2 emissions, for which the electric vehicles will potentially come under. Some of those, you've got to be careful with that classification because it can drop over time. So electric vehicles, I think, are exempted still, and you can operate salary sacrifice arrangements on them because they meet the 75 gram under regulated requirements. That's why we also had the changes to the RTI FPS for payrolling to add in the electric car and mileage ranges and things like that. So there are options.
Super. And we've got a really interesting observational question here coming in from Sheila, which says, are cycle to work schemes at risk given the move to hybrid or agile working, especially if the majority of your staff end up being home workers?
Presently, the answer is no, I don't think they are at risk. The law is worded in a certain way, but the activity of HMRC is something slightly different. I'm allowed to say this. Sam will tell me off in a minute, and maybe Lou. But the reality is the bike schemes are for riding to work, cycle to work schemes. However, the HMRC indicate that they will not audit whether individuals have ridden the bike to work or not. Am I speaking out of turn there, Sam, do you think?
Well, I think ultimately HMRC are going to be looking to collect as much tax as they can. So, things could always change in the future. And I think it's ensuring that you do have, it's been a while since that was first discussed, but I seem to vaguely recall discussions about the processes you would need in place to be able to monitor the use of the bicycles at the workplace or, going into the workplace and the like. So, and I would never discount HMRC checking anything if there's a potential tax bill in it. So.
Before we get there, we're going to go to our resident expert on right to work, John Dorney from DWF, to talk to us about some of the new guidance which was released at the beginning of July. John, tell us about some of the changes and why they're important, because I think, as you say, or as I said rather, some of this guidance has come out a little bit late.
Thanks, Nick. Yeah, they are important. I think the starting point is to say that in this country, it is illegal to employ somebody who doesn't have the lawful right to work in the UK. And if you do so, then you are subject to a civil penalty, and that's £20,000 per employee if you unknowingly employ somebody who's not got the lawful right to work. And it's unlimited fines and directly goes to prison for 5 years if you knowingly employ somebody who hasn't got the right to work. So it's quite serious stuff. But employers can avoid liability to this by getting something called the statutory excuse. And that is quite simply is you carry out checks on an employee before they commence employment with you, following a Home Office guidance, and satisfy yourself that they've got the right to work in the UK. If you do this and you make a record of having carried out the check, if it subsequently turns out that the employee is working lawfully, then you're bulletproof, you're fine. The reason I say that is there's been a massive change on the 1st of July to the right to work checks as published by the Home Office. And the reason the changes come on the 1st of July is because of Brexit. As you might be aware, we used to have a thing called free movement of workers, where European nationals could come to the UK, live and work in the UK, and that was actually fine. We left the Union, there was a transitional period, and basically our European friends could come to the UK until 31st of December 2020 and exercise pretty much treaty rights and then carry on living and working in the UK. To work out which Europeans have these rights pre-New Year's Eve 2020 and which Europeans came in after from 1st January 2021, we subject to normal visa control, same as ways Australians, Americans, Indians would. We set up this thing called the European Settlement Scheme. And under that, resident migrants in the European migrants in the UK has to mandatorily register on the scheme, and that has to be done by the 30th of June. So 30th of June has arrived, and in theory, everyone, all our European friends should have now registered, and that's why the change has come about. Until the 30th of June, there was a transition period whereby the old right-to-work checks applied. So, for example, if, say, a Spanish national had joined your employment in April, you could have checked his or her passport at the date, and that would have been fine for purposes of the statute of excuse, although the passport only now demonstrates nationality rather than residency, which is the criterion. I've been asked numerous times over the past few months what's going to happen after the transition period, and I've been saying we're waiting on guidance. The guidance is coming. It'll be here shortly. The guidance actually landed on or around about the 1st of July. And so right at the very 11th hour, people are concerned about what happens now. There are various changes in the guidance. The main one is with regard to European nationals living and working in the UK, and those who were here in time, as I said, on 31st December, and those who may have come after that date who need a different permission. And the way you work out whether a European national can work for us is you do, although in the main past it's been documentary check, checking hard copy documents, it's now an online check. So the way it works is the European who will have obviously registered under the scheme because it's mandatory, and why wouldn't they have? They can go onto their own immigration status link with the Home Office. They can get a share code, and they can then give that to their prospective employer, or in fact they can actually get the Home Office to email that code to their prospective employer. The employer sort of tippy-taps the code into the system along with the migrant's date of birth, and then when carrying out the right to work check in the presence of the migrant, that might be face-to-face or by video screen, a photograph will pop up of the Home Office record saying whether the migrant can and cannot work in the UK, and and for how long, whether it's a one-off check or might need to be repeated. And it's as simple as that. You just need to do the check online and make sure you do it in accordance with the Home Office guidance. For example, you must do it through the employer's check portal. You don't look at the migrant's own status document, because that won't give you the assistance you're looking at. The other questions I've had, and it's popped again and again, is do we need to do retrospective checks on all the Europeans we've got working for the moment? And the answer is no. If you did the check up to and including the 30th of June, anybody who joined us as an employee or 30th of June, then the previous check would apply. So again, back to my example of a Spanish migrant joining us in April or May of this year who shows a passport, that's absolutely fine. You don't need to check their permissions again. And Home Office guidance actually says, if you were to actually say, well, actually, we want to make sure everything's in good order, so we're going to check all our European colleagues and do retrospective checks, that in itself could be discriminatory, and you may get some discrimination claims arising. The other issue then crops up, and this was coming up again and again and again from employers, is saying the EU settlement scheme is mandatory. You have to register on it in order to be working lawfully. And if you don't, if the European hasn't done it, then technically you're working here unlawfully. So if you've got somebody who's been here, could be here for 10, 15 years, but they're not registered, they're now working lawfully. And I take you back to my point at the start of speaking, saying that if you employ somebody unlawfully, it's £20,000 fine. If you knowingly employ them, it's unlimited fine and direct to go to prison. So you just overhear in the canteen or some European mentions in passing, oh, I must get around to registering on the scheme. Alarm bells start ringing. So a lot of employers will start looking for guidance on this, saying, does that mean we need to sort of sack the employee immediately? Otherwise, we're risking, so employ them lawfully, knowingly, with the implication of that. The guidance helpfully has come out now and said, for yet another interim period, this is only until the 31st of December this year, and goodness knows what position will be after that. But if you find out on an audit or inspection, it comes to light, you've got a European national who's working for you, who hasn't registered under the scheme, and what you need to do is tell them they must register late under the scheme and give you, demonstrate they've done this within 28 days. And that'll be either a certificate of application or even just an email acknowledgement from the Home Office saying, thank you for your late acknowledgement. You then do a check through the employer checking service, which is another online check, and Home Office can then confirm to you whether or not you can or cannot continue to employ this individual. So there's been a lot of unease, a lot of uncertainty over the first 6 months of the year for a lot of employers. We have now got the certainty, but distilling it down, it is for European nationals going forward. New hires, it's an online check, and you save you print off the check or save it to PDF or JPEG. And with regard to existing employers who are working for us before the 30th of June, it comes to light that they haven't registered under the scheme, then we've still got a grace period in which we can get them to remedy the situation without putting ourselves at risk of civil fine or penalty.
Fantastic. I think it's a great example as well of where payroll really does blur with HR in some of these responsibilities. You know, if you get wind of someone, as you say, that isn't potentially registered at the minute, you've got till 31st December, act on it now, speak to your HR counterparts if it's not your responsibility, but you hear about it. I think this is where that relationship can really prosper and then is continuing to blur and get closer and closer together. So brilliant summary there, John. Thank you ever so much. Well, we're going to open up next subject, which for me is a subject close to my heart, recruiting and retaining payroll talent. Now, interestingly, there's a question that comes up quite a lot, which is, are more people leaving the industry? And I could talk about this subject for hours, and I'm aware we're short on time if we need to do that. So I'd rather actually open this to the panel before I jump in and just ask what the panel think about whether or not people are indeed leaving the industry or not. Just a quick run through. I'm going to start with yourself, Samantha. Do you think people are leaving the industry?
Well, I can only speak anecdotally from my experience and my discussions that I've had with friends and former colleagues about whether or not people are leaving. I would say yes, they are, but of course I'm mindful that we've had a response saying no, actually this is a primary time. But yes, certainly I would say that for individuals who've worked for a very long time in the profession, this might have proven to be the straw that broke the donkey's back. We've had real-time information come in to support the payment of universal credits, but universal credits took a lot longer coming in. Then, of course, we had automatic enrolment. Yes, we had a lot longer to get used to the idea, but nevertheless, that put a big burden on a payroll professional that they'd never had to deal in such a way with pensions before. And then, of course, with no notice whatsoever, and no one can blame government for this, with no notice whatsoever, we go into a pandemic. And as I think someone's commented already, this has really caught a lot of us by surprise. The payroll processes, those contingency plans that never allowed for a pandemic, although many did, but not all. And that transition from working in the office in teams where you're talking to each other constantly to working from home when you're in isolation. And I remember mid last year, we shared the results of a research that had been done that asked where people were working from home, and there were quite a significant percentage were working on their landing. The kitchen was also a popular place, and the bedroom. Mental health is a very big issue at the moment, and one of the things that links to that is a good night's sleep. So working from your bedroom and trying to have a good night's sleep from your bedroom brings about all sorts of challenges. So yes, I would say that there's a number of individuals who are choosing to leave the industry. Many who've been in the industry for many, many years, and that's a huge shame, because that's a loss of real talent that we're having, but also younger people whose parents have been seeing the pressure they've been under working from home, and then they say, come on, you don't need this pressure, you need to leave. And they're younger workers, and they've chosen, to listen to their parents, as quite often younger people do. It'd be good.
That's all right. How about yourself, Lou? How have you seen the industry? Do you think people are leaving? I'll give you my view from a recruitment standpoint afterwards.
From my point of view, I haven't experienced it in Northern Ireland. We're always looking for payroll people, but it's not that I can see people leaving the industry. But if I was refer back to the social media and the groups that I belong in, I can see people actually physically thrown in the towel because they have had enough, because it has been relentless really in the last year and a half. I think, as Sam has pointed out, I think that's made worse by the fact that you are trapped at home, so to speak. I mean, I've enjoyed it. I was always against working from home, but now today I'm back in my EY office for the first day, and I have to say, having to be up and on the road to do that drive back into Belfast, a mere 12 miles, was a killer. But, for me, looking at social media, very much there are people have had enough. I suppose my concern as a payroll professional is the people coming into the industry, do they know what Do they know how to run a payroll? Do they know all the rules and regulations? Do they have a qualification? I do really think that's very important. And are we getting the quality of people and the standard of payroll that we need to be delivered? That would be my bigger concern, to be honest.
Sure. Certainly from a recruitment perspective, I think there's everything you've both said is absolutely right. There's definitely a shortage of top payroll talent out there at the minute. Those that really know the nuts and bolts of payroll. It's actually never been, in my experience, nearly 20 years now in payroll recruitment, a busier time for people looking for positions and clients looking to hire. And that's as a result of many things that have all kind of come together in the perfect wave. One of those is working from home. Those that have liked that situation and don't want to return to the office, and where employers have said you have to return to the office, they've decided then to jump ship and go to employers that can accommodate the new way of working. And like the domino effect, when one goes, you need to replace, and they all start moving in things. So that's been one cycle. Secondly, there's a huge drive across HR and payroll for digital transformation. Across all facets of business, organizational improvement, the pandemic has highlighted a number of potential weaknesses or gaps in models, and they're now trying to plug those with new engagement offerings and other bits and pieces that we've talked about previously on PQ2. But that's also resulted in more recruitment, more people moving, more people changing, more investment. Interestingly, in terms of people leaving, I do think we have lost some experienced talent. That's for sure. But actually, one thing Furlough has done, from what we've seen, is introduced, because people have had to find talent quickly to help with Furlough, it's pulled a lot of junior people into the industry that may not have considered it before, starting with Furlough calculations only, spreadsheet based, who have now stayed in payroll. They've actually enjoyed that pressure, and who never thought about payroll as a career before, and now remaining in that industry. And they were only brought into it due to Furlough to handle workloads. So I think that's been a really interesting shift, because historically it's been really difficult to encourage the new generation to come into the industry. And I think that's been a really positive impact of COVID, is bringing people into the industry to help with the Furlough calculations. I think the one thing that I would comment on that I've seen as being the biggest shift recently, and I'm doing some work with the CIPP on this as well, so Lou may be familiar, and we're going to release this shortly, is there are now more pathways in payroll than there have ever been before. When I started in this industry 18 years ago, it was very standard. You started in payroll administrator, you worked through to payroll manager, and you naturally hit a bit of a ceiling, or you went to a software provider and you kind of took that angle. We've identified so far over 62 different payroll titles, which are all very different in terms of responsibility, that, you know, go from payroll web development through to payroll sales, through to payroll analytics, through to payroll and reward. Global payroll now is much more prevalent than it ever used to be as we work into a more global payroll world. So I think sometimes there's a perception that we're losing people from the industry, but actually a lot of those people have taken different directions within the industry, and the titles change. They may still have responsibility for payroll, but the title might be reward. They may still have responsibility for payroll, but the title might be something different. And that's been a massive shift that we've seen as well. But for sure, Samantha, absolutely right. A lot of people have found it very stressful, and they've either changed and pivoted their careers into those new directions. Maybe they've moved into sales, training has been another area, tutoring. It could be into implementation or project management, but they're just a little bit tired of the day-to-day after what they've been put through over the last months and all years with what's happened. For me, as a recruiter, it's never been a more exciting, busy time for payroll. I'm hugely optimistic about the future. I think employers should be doing everything they can to retain top payroll talent, because as you rightly pointed out, Lou and Sam, it's very hard to replace. Good talent is difficult to find, and employers, I think now, hopefully, if they're not, they should start to recognise the role that payroll people play in their businesses, reward them appropriately, which may be in equal terms with HR and finance counterparts, to make sure that they are happy, provide engagement initiatives that allow them to stay happy and well in their minds as well, which may involve working from home more, something that historically everyone said payroll couldn't do. And I think that's the biggest shift we need to see now. Employers need to really move with the industry to understand they need to keep that talent, because it's very expensive to replace, and I know because that's what we do, and it's very, very difficult to find good people. So I think hopefully there's been a real raising of the profile, raising of the industry, and raising of understanding that the role is really very, very challenging. These webinars don't prove that enough, because it bamboozles me every time. Then I'm sure those working in the industry will know that anyway. And interestingly, of course, we've got the apprenticeships, which I know I've got a bullet point here, where she's really encouraging not just youngsters, but individuals that hadn't considered payroll as an industry choice before. It's much, much more accessible now than it used to be. Hopefully that will plug some of the gaps for those that are leaving at the top end. But for me, it's an incredibly exciting time. From yourself, Simon, you work for a software provider, a payroll services provider. You're an example, or you work for an example company that does offer different career trajectories, different titles, different roles that you can be involved in. What's your view on the market at the minute in terms of recruiting and retaining top talent?
Well, I think I'm with you, Nick, and I think there's great opportunity ahead. And we've had a period of opportunity to change direction a little bit for many payroll professionals. Now, there is a question of whether that suits some personality at times, because as a professional, we've been brought more to the front than we had before. I mean, to think, would we have been running Payroll Question Time in 2019? I don't know. This was initiated because of the pandemic, really, and the need. So we've kind of established this. So I think we're very much more collaborative, open. Social media is helping there. But I have seen that some people have suffered. And you can see that in some of the web chats. Maybe that's because there's not been a realization in some of their businesses of the need, or they've been that desperate. But some have probably seen the workforce around them all staying at home, getting 8% of their pay, and they're working 20-hour days to make sure that those people get paid, yet they've not got any more pay themselves. And some of them are probably even paying people more than they earn on that basis. But I think there's great opportunity for the future. You'll know, I believe in qualification. So I have the Master of Science. You've got Lou there that's got a chartered status. I'm a fellow of the Chartered Institute of Payroll Professions. I think we are a professional organisation and be proud of our professionalism and our place. But I think there's also been a mention earlier that actually payroll is a little bit undervalued. So if you said how much per head for payroll, how much per head for tax, etc., there'd be quite a difference, and even how much per head for HR. And it's an element of actually payroll is no longer putting wages in brown envelopes and calculating tax and NI. It's much more complicated than that. We could say that's because systems do it all for you now. So it's just, as some Lord said some years ago, press of a button. It's much more than that. You've got to have the brain to press the button, because a lot of it is not the software. It's all the process and how business works. So I think it's a great opportunity for payroll to become important and strategic in business today.
Fantastic. I mean, two things I would just add to those points. From my perspective, Simon, is one, if you're a payroll manager, please try and take a moment, and Samantha's mentioned it's so important to take a moment out and just strategize, take a breath and look at your department. Where can you improve? Do you need headcount? Do you need to do something different? Because so often we're head down so much that we don't lift our heads to really see what's ahead of us. I'm a big believer in recovery for top performance. And if you want to perform optimally as a payroll manager or any payroll professional, or in any walk of life, you need times to recover. You know, whether you're a Formula One racing car, you go into a pit stop to recover, and it's the pit stops that really make you win a race, right? And you'll heard of that on other podcasts that talk about these things. But ultimately, you need time to recover. And when you're recovering, that's also a time you can lift your head and think about your department strategically to know where you want to take it, what you need. Do you need headcount? Do you not? And really think about it and give yourself time to breathe. Secondly, I would say if you are feeling undervalued, without encouraging an exodus of people running to their HR departments to say, I need a pay rise, have the conversations now rather than after you've decided to go and find something else. Because I'm a big believer, and this is going against what I do as a recruitment firm, really, but I'm a big believer in get valued while you're there, not because you're forcing someone's hand. And I think now's a really good opportunity to prove what you've delivered over this pandemic. You proved your value nationwide, globally. Go and have those conversations. And I think you may well be surprised, because actually the reputation of payroll has raised not just within the payroll community, it has really increased in the HR community and the finance communities as well. So I think you'll find those responses and the reactions you get to those questions will hopefully be much more positive now than they may have been in 2018, 2019. Just about out of time. So can I take this opportunity to say a huge thank you to our panel for their wisdom today, as always, and of course to all of you, our wonderful audience, for joining us with your questions and for listening to this discussion. I look forward to seeing you all again really soon in September at the end of a couple of weeks of celebrations. See you all soon. Thank you.
Yeah. Bye. Bye.
Bye.
Thank you so much for tuning into the Payroll Podcast with Nick Day of JGA Recruitment. If you need help with a current payroll vacancy, then please get in touch with Nick and his team. All contact details can be found in the episode notes. In the meantime, to make sure you never miss a future episode, please subscribe to the show through any of your favourite podcast channels. Till next time.